Now friends, we will discuss about the bill receivable. Now bill receivable ledger we have to prepare to find out the closing balances of the bill receivable. Uh, Whenever we have to prepare the bill receivable, opening balance we should write in debit side, that is to balance brought down, and closing balance we should write by balance carried down. Opening balance to balance brought down, closing balance by balance carried down. Then after that, if you see that, we have to show if the bill is dishonor, we have to put by debtors. Debtor account debit to bill receivable, bill dishonor. If the bill accepted, then entry will be bill receivable account debit to debtor account. Bill accepted, debit side we have to show debtors. If the amount received from drawee, the bank account debit to bill receivable. Suppose endorse the bill, that time creditors account debit to bill receivable. And such a way we have to prepare bill receivable account. Then after that we will prepare bills payable account, and we have to find out the closing balances of the bills payable. For that purpose, opening balance by balance brought down, closing balance to balance carried down. If the bill amount paid or it is discharged, so debit side to cash or bank. If the bill accepted, the creditors account debit to bills payable account by creditors. Bill dishonor, the two creditors. So by creditors, bill accepted, bill dishonor, two creditors. That basis we will prepare bills payable account. Then friends, we have to show wages. Wages for the period from the last account to the date of file, and it should be debited to the pro forma of the trading account. Wages amount, how we will calculate? The wages paid, we have to deduct the wages incurred for installation of the machinery. We have to deduct the outstanding wages during the year. We have to add current wages outstanding, and whatever amount of wages come, it will be shown debit side of the trading account. Then friends, manufacturing expenses also debited to the trading account, and these are factory expenses also show for the date to the date of the fire should be considered. Now friends, one of the important concept in our fire insurance claim, that is abnormal goods. What do you mean by abnormal goods? So it is a slow moving goods. It is a damaged goods are called abnormal goods. Goods which are slow moving, which are damaged, are called abnormal goods. Sometime we will ask this question for multiple choice. Valuation of such goods may be at cost or at lower value as given. It becomes necessary to adjust the purchases and sales and stocks on account of abnormal goods, because abnormal goods are included in the purchases, sales and stock also. Now friends, abnormal goods item treatments that we are going to discuss. If the abnormal goods are included in the closing stock, what will be the treatment? First of all, we have to deduct the value of the abnormal items from the closing stock. We have to deduct the cost of the abnormal item from purchases, and we have to deduct the sales of the abnormal item from sales. Then, if the abnormal items are included in the opening stock, so what will be the treatment? Treatment is deduct the value from opening stock, deduct the sales from the sales, deduct the value of the abnormal items if any from the closing stock. These are treatment for the abnormal items are included in the opening stock. Sometime if the abnormal items are returned to the some extent from the closing stock, that time deduct the value of the remaining items from the closing stock, deduct the cost of the abnormal item from the purchases, and deduct the sales of the abnormal item from sales. Now friends, pro forma of the memorandum trading account, pro forma or memorandum trading account, how we will prepare that we are going to discuss. It is just like a trading account, but we have to find out balancing figure stock on the date of file. In trading account we will find out the gross profit, but in memorandum trading account what we have to find out? Stock on the date of file. Opening stock, purchases, manufacturing expenses, wages, carriage, then sales after deducting the return, stock distributed as a free sample, stock sent on consignment, stock sent on approval, stock kept with belly. All these items we will record it, and balancing figure will come credit side. It is called as a stock on the date of file. Memorandum trading account we will prepare to find out the stock on the date of file. Now one example that we have to see. Fire occurred in the factory of B Company Limited on 30th June 2020, which had taken an insurance policy for ₹50,000 subject to average clause. From the following particulars, calculate the claim to be recovered from insurance company. Stock on 31st 12/2019, 50,000, it is the opening stock. Purchase from 1/1/2020 to the date of fire, 2 lakhs. Sales from 1/1/2020 to the date of fire, 2,40,000. It was ascertained that the company for the past 5 years had made an average gross profit of 20% on the sales. The value of the goods salvage was ₹14,000. Now friends, B and Company, they have a factory and fire occurred on 30th June. Fire occurred on 30th June. Now here they are provided stock on 31st 12/2019. It means it is a closing stock of the 2019. Next day, that means in 1st January 2020, it will become a opening stock 50,000. So the opening stock they are provided. Purchases from 1/1/2020 to date of fire they are provided. Sales also they are provided. Gross profit 25% also provided. Salvage means save goods. We have to prepare first memorandum trading account. How we will prepare? It is up to the date of fire is there. First of all, we should write the opening stock 50,000, purchases 2 lakhs, sales value 2,40,000, and the gross profit we have to find out 25% on sales. The sales value 2,40,000 on 25%. That is ₹60,000. 2,40,000 on that we have to charge 25%. Then we have to close the balances. What are balancing figure come? It is a stock on the date of fire, that is 70,000. Then we have to find out the claim. Claim purpose, we have to find out the actual loss. Stock on the date of fire 70,000. We have to deduct the salvage value 40,000, and actual loss will occur 56,000. Then we have to find out the claim value. One formula is there, amount of policy divided by stock on the date of fire into actual loss by fire. The amount of policy amount 50,000, stock on the date of fire 70,000, and into actual loss 56,000. The claim will be 40,000. So such a way we will find out the claim. We will find out the easily fire insurance claim with this particular formula. So friends, I hope you understood how to prepare the memorandum trading account, how to find out the actual loss, and the claim formula also there. So it is very simple to study the fire insurance claim. Now you can read this, study these all the slides, and write in your notebook. We will discuss further in our next lecture. Okay, bye. Thank you.